Testing, testing, testing. Can you hear me, guys?
Yes, yes, yes.
Amazing, amazing, amazing. GM, it is currently 17 minutes past 10 p.m. UK time. Welcome to another amazing episode of Technically Speaking, which is a free weekly crypto macro stocks webinar hosted by myself, Ninja T, aka Fadlan Effendi, one of the founders of Blockchain Sensei, which is a decentralized ecosystem of crypto nerds. This webinar covers everything macro stocks, crypto, etc. Please note that neither myself or anybody at the Blockchain Sensei ecosystem are qualified financial advisors. In fact, I go as far to say that I am 100%, legally speaking, unqualified to talk about the things that I'm talking about. I'm merely sharing um, research, which I have spent hours of independently doing. I recommend that anybody seeking financial or legal services contact a real financial advisor who is accredited. Nothing in this video is financial advice. I do not intend to be perceived or received as a financial advisor. Please always do your own research. The number one protocol that I recommend to do your own research against what I'm saying is using Grok. It's my favorite LLM, favorite AI. You just need a Twitter account if you don't have one, or X, and you can log in. It's really good. I've done multiple episodes before on how to utilize Grok with your investing and trading. Go to youtube.com/blockchain sensei for over 400 hours of free education. Before we get started, I would like Ryan, who is a new friend of mine who I met 6 days ago on a video shoot. He is a award-winning director. He was saying something amazing off stream. If you could say that again, I'd really appreciate that as an opening to this webinar.
Yeah, so I was just saying that my story is kind of I've been properly investing and trading and sort of taking it seriously since COVID. Like a lot of people sat at home, it just occurred to me that, well, look, I know the elites and the bankers, they're not sitting down losing money. So what is it that they're doing that I need to be learning about how to do? But I've been actually interested and sort of involved in Bitcoin since it was £400 when a friend told me about it. But ever since, Bitcoin's lovely, lovely, jubbly lows of like £400, I've made money, but I've lost more money. You know what I mean? And I've made money again and I've lost money. And, up to now, I'm still not rich off crypto, which is highly annoying because I'm quite certain that I know a lot more than your average Joe about crypto, but these markets are designed to shake you and break you. So any advice that I can get, super helpful. So that's why I'm here, man.
That is absolutely sensational because I'm sure many people across the globe can relate to what you're saying, but are very private about it and are not willing to disclose that. So thank you so much for disclosing that. Now, the stat on investing and trading is that 93 to 97% of retail participants make a loss in the market, meaning the subtotal amount of money that they have invested and or traded in the market versus what they have realized is in a P&L loss. The edge that I hope to give you guys is to be in the 3 to 7% that are profitable, first and foremost, and then rise into the ranks of your 1%, 2%, 3%, etc. Of course, I do not disclose my P&L publicly or my net worth or anything like that. So please do your own research and take everything what I'm saying with a pinch of salt. Because at the end of the day, I'm just a guy in a hoodie in front of a Zoom camera talking about my research. So the first, I'd start with a little bit of philosophy and then I will get into some technical charts. The philosophy which I follow, preach, and teach is the philosophy of buying great assets at great prices and having reasonable time periods in which to take profit, to buy, to sell, and to buy back. I've said this in multiple webinars, but I'll say it again for the newcomers, especially Ryan and my homie Mika and Mikkel. I just lost my train of thought. Sorry, I'm just on TradingView right now.
Happens.
I was gonna go to something deep, but I'm just loading my trading view. Okay, you know what? Let's forget that. Yes, we'll start off with this. So the Fed cut on Wednesday, the 17th of September. On Sunday, the 14th, 2 weeks ago, I said one out of two, I believe one out of two scenarios is going to happen. First of all, I don't think anybody should move in the market as an investor and or trader by having overly conviction on one scenario, i.e., think that something's just going to go up by a lot. I always recommend that you have three thought processes. So you have one prediction in which that you are most confident is a likely scenario. The second prediction, which if this first prediction does not happen, this is the most likely scenario, and then an unlikely scenario. So on Sunday, the 14th of September, what did I say? On the webinar, and you can G-check me on YouTube, I said that the Fed is cutting. Well, there's a 90% chance plus that the Fed is cutting. I almost I'm 100% sure that the Fed's going to cut, and I believe one out of two scenarios is going to happen. The likely scenario one is going to be a buy the rumor, sell the news event. However, because retail is more intelligent than ever, oh my God, we've got a hell of people in this room.
Yeah,
Welcome,
so
Ryan.
it might be
Um,
me joining. I'm joining from my laptop now.
okay, amazing. So it's either going to be a buy the rumor, sell the news event, which is historically the most likely scenario, because for those that don't know, interest rates have not been cut for the whole year. So finally, we have some fundamentally monetary policy macro bullish news because, of course, when interest rates are cut on credit card and loans, it increases risk appetite because it's cheaper to borrow money. So I said it would either be buy the rumor, sell the news, or it would be a bull trap in which the market goes up and then the market pulls back. Now, Ryan it was unfortunately retail exit liquidity for the bull trap. Because when I met him, he told me that he bought Ethereum at, was it 4,200 or something?
Yeah, man. Something crazy like that. Something
So
crazy.
it's
It was just
unfortunate.
like it was one of those ones, like because a lot of this is about psychology, isn't it, as well? And I think
Mhm.
one night I was just looking at the charts and I thought, oh, Ethereum looks like I don't know what thought ran through my head, but I bought it, went to bed, woke up, and the market had just massively plunged, and I was just vexed with myself because I know better, but I did it anyway.
Yeah, so I mean, even from a like a baby technical analysis point of view, it was quite obvious to not buy Ethereum since at least Friday the 18th of Friday the 20th. Obviously the 8th, sorry, Wednesday the 17th, yeah. So Wednesday the 17th, this is the FOMC basically. And then we had a little bull trap, and then it fell down to the exact point of my trend line, which I thought it would bounce to. Now, do I think the pain is over? Not necessarily, because I have this theory that the end of the quarter is on Tuesday, the 30th, but Wall Street's open till Friday the 3rd. Um, I wouldn't be surprised, and I hate putting dates on this, if the market bottoms out between the 7th and the 10th. Because seasonally, Q3 is usually insane. Now, I'm just going to start immediately with a shill that I have been studying hard, and that's the Crocs stock. Crocs, historically speaking, has been a Q4 company, as well as other assets like Bitcoin, right? But let's have a look. So, I mean, I don't options trade. I know Mikkel here options trades, but the I mean, I don't really understand why it was bearish in 2024, but the previous two quarters of Crocs has basically told me that this is a Q4 company. Why? Because these guys like a global Christmas present, right? Everyone buys Crocs for Christmas to this day. So if you look at seasonality, and I wish I had like a better data set for you. But let's have a look at Bitcoin. And then I wish I had one of them fancy charts that tells you seasonality amongst different asset classes. But let's just have a look at Bitcoin in the past 4 quarters. Sorry, past Q4s. So this was last year, extremely bullish. Oh, it's 2024. And then let's have a look at the quarter before that. And then I don't think, to be fair, 2022, I'm going to scrap this out because this was a bear market, right? So, seasonally, we expect Q4 to be really good. And what would be a better catalyst to squeeze people out to, and I hate doing price predictions, right? But I believe that breaking this 100K would be the psychological ultra fair. There is nothing bullish about this Bitcoin chart. Let me go down to okay, so let's do some basic TA on the 3-day, and I'll put a 10-20 moving average here. Right, so we've got a crossover on the 10-20 moving average as of Friday the 29th of August. The yellow on the RSI has remained above the purple since the 11th of August. We're still getting dark flashes of red here on the MACD, and the DMI recently, 22nd of September, which is very significant because that's 4 days after the Fed cut, we're having a bearish momentum on the DMI. So that's 4 indications. And if you just take off the indicators, we're basically getting lower highs. This is a sharp wick here on 98K. I don't want to overly predict the future. And please don't leverage trades on my predictions, because I don't leverage trades, so I don't know why you would leverage trade my predictions. I more do this for spot. But if I could predict something, I think there is a good chance that we go down to maybe like 98K, wick there very quickly between now and the 7th to the 10th. This is just me conspiracizing. Please don't leverage trade over that prediction, but this is kind of what my eyes see. I'm very happy that I predicted the sell-off on the Sunday the 14th webinar. This is why tune in every week, guys. You know what I mean? What the most important play is, first of all, for those that weren't there, I publicly said that on Sunday the 14th, that on Tuesday the 16th, I was looking to sell 80 to 85% in USDC. That has since been a sensational call, especially if you were in alt like Solana. Now, did I short Solana? No, because I don't like doing that very often. But this was equity clock works nice to see seasonality, but not on crypto. Equity clock works nice. Yeah. Please expand. Sensei, Mikkel. equityclock.com/seasonality. Okay. Let's have a look. Alrighty. Let's have a look at the. Let's see what
Quick
Mikkel said.
question while you're doing that, bro.
Yes.
You said you go into USDC and not Tether?
I do go into Tether. Did I say I don't go into Tether? I do.
No, you didn't say you don't go into Tether. I just maybe just assumed you didn't because you said USDC. Is there a reason why, or you just do either?
Yes, I will answer that question. So, and then I'll go into this equity clock. So, in my opinion, if I had a binary choice to hold one stablecoin, it would be USDC, because USDC is backed by Circle and Coinbase is on the stock market. I don't actually understand how USDT have lasted this long because I was very sure at one point they were going to go down. But I'm pretty sure at this point, for those that don't know, and let me just iterate the size of USDT, which astonishingly is larger than USDC itself, is it's owned by like China, it's owned by like the Chinese and it's backed by multiple assets such as Bitcoin and bonds and treasuries. And I think now it's just so big it can't fail. However, I would rather bet on USDC when it comes to holding long term. Pardon me, holding long term, simply because it has more government infrastructure. Where USDT, even though I don't think it's going to fail, I think it has that 0.3% chance if like World War III broke or something. Where USDC is just backed by the American government one for one, US hard fiat currency dollar, rather than being a pool of assets. USDT basically claims they've got more assets than USDT, but you know, what are some assets for? I don't know. That's just I don't have a deep reason, but that's my main reason. I do use USDT, and it's more of a psychological thing. So let's say, for example, I put $1,000 in meme coin, right, on Solana, and then it goes to 3K. I'll cash out 1K in USDC, and then I'll trim profits into USDT just because psychologically I see green dollars as something to trade and blue dollars as something to more invest in. But that's just me and my system. It's nothing to do with how crypto works.
Okay, got you. It makes sense. Makes sense. Thank you, bro.
No problem. Okay, so let's have a look at the equity clock. Seasonality refers to particular time frames when stocks and sectors indices are subjected and influenced by recurring tendencies that produce patterns that are apparent in the investment valuation. This is how you know Mikel's the GOAT. Tendencies can range from weather events, temperature in winter versus summer, probability of inclement conditions. I absolutely do not include weather in my analysis. Maybe I should add it as another layer. The calendar events, quarterly reporting expectations, announcements. The key is that tendencies recurring provides a sustainable probability of performing in a manner consistent to previous results. Jesus Christ. Identified below are the periods of seasonal strength for each market segment. Each bar will indicate a buy and sell date based upon the optimal holding period for each market sector. Okay, let's have a look. The S&P 500. What am I reading? What does this mean? Mikel, you have to break this down for me, man. This is beyond my jurisdiction. I'm gonna lie if I say I understand what this means. So I'm not a financial advisor.
You can hear me. Yeah, you can hear me.
Um, you're a little bit muffled, guys. Can you hear? Can
Okay,
you
let me
hear
turn
it?
off my Bluetooth. Any better now?
Yes, perfect, my bro. Let's go. Tell me what's
Let me
going
turn
on.
on my speaker. I can barely hear you now, actually. So basically it's like so the weather events are like example, like hurricane seasons or typhoon season, like some of these stuff where consumer discretionary, people buy like canned goods when they have like scare or hurricanes or people, get a bit defensive on stocks when like people feel like you know, earthquakes or hurricanes gonna affect America. So these are just like times when I suppose or this is trying to show these are just times when buying and selling data are like optimal periods for to be inside a sector. I guess
Mm-hmm.
for your crypto it would be under commodities since Bitcoin is probably a commodity now. And technically, obviously it's not listed here, but you could probably say like during periods where like that June to October period. You
Yeah,
have like
October.
you have silver, you have gold, you have copper, you have platinum, you have natural gas.
Yeah.
Um so you'd say, people probably have more people go more defensive, people get more like have more liquid assets. This is the
Uh-huh.
same time people send people to school as well, you know.
Okay.
So yeah, this is just like a gauge for I guess seeing how sectors rotate in the market. Stocks.
Wait. Is this basically saying that from November the 23rd, the Russell 2000 is in a bullish season? Or am I misunderstanding this?
No,
What
no, yeah,
November
yeah,
23 means?
no, no, you understand it. It starts April, like say it starts
Oh
November
my God, you
23rd.
just broke the matrix. You just
Yeah,
broke the matrix for me.
yeah.
This is amazing. You've
But
you've confirmed my bias.
obviously, right? Like this doesn't equate for like war or like like natural events or like um like I guess like COVID or these kind of things.
No. Guys. Let me break this down here. So according to this, we got the S&P 500 as of the 28th of October. The Russell 2000. Who here wants to explain what the Russell 2000 is? Not Mikkel. Salman, come on. I've put you on enough blockchain backer, my bro. What is the Russell 2000?
It's the 2000 smallest companies in the stock market.
In the American stock market.
Yeah.
So, guys, the Russell 2000. One second. Let me just get him up. What's his name again? Is it Jordan Belfort? Wait. Yeah, Wolf of Wall Street. You see these guys on the phone selling shit. That is what the Russell 2000 is. This is basically penny stocks, aka the meme coins of the stock world. We have been going through a bull market which has broke traditional thought patterns, where the S&P 500 has been ripping at the same time gold has been ripping. By the way, I don't want to call it, but I think if gold gets to $4,000, yeah, I think this will be the peak. I don't think gold can go past 4,000, and I honestly think that gold is going to slam down to maybe 3,000 at some point in the next couple of years. And then I'm hoping that this pullback in gold will be a multi-trillion-dollar injection in risk on assets. But I digress. Let's go back to S&P 500. So we've had S&P 500 shoot up, Nasdaq shoot up, Bitcoin shoot up. But guess what? Altcoins and penny stocks have not really been doing so well. And everyone's asking, what's happening to my altcoins, right? Why is things not going up? One of the major reasons because the Russell 2000, which has typically been in line with previous bull markets. Notice here, right? The Russell 2000, upon breaking its all-time high, which is here, okay? In this period, when it broke the all-time high, this is when Bitcoin went from like 1K to 20K. This is a COVID dip, and the Russell 2000 broke all-time high as of the end of 2020, start 2021. Obviously, this was in line with money printing. This is when Bitcoin skyrocketed from what, 9K to 70K. And the reason why I'm saying Bitcoin is because Bitcoin is the greatest, I guess you could say, risk on and risk off indicator in the world, because it's a nice inflection point when it comes to kind of like for lack of better word, barometer for like a risk on assets across the world, right? Remember, all assets are tied together. let me just go to the Twitter. Screenshot from blockchain backer. Basically, nobody can tell me that assets are not correlated together when it comes to tech stocks and crypto, which is where the biggest gains in the world are, but also where the biggest losses are. Hear what I'm saying. Crypto is the greatest tool in the entire world to multiply your capital. Tech stocks being the second greatest asset class. Arguably, if you're Mikkel, you could say options trading is the greatest wealth multiplication tool in the world, above spot trading crypto. I wouldn't know because I'm not an options trader. Yeah, in spot, definitely crypto is king. Tech stocks is number two when it comes to spot, not including leverage and options. But this is very, very exciting because the S&P 500, the Russell 2000, the Nasdaq, the top 100 US tech, these are the three most correlated things, especially the Russell 2000 is the most correlated thing to altcoins and meme coins in the stock world, all basically concluding to a bullish Q4. Now, a bullish Q4 can also mean drawdown up until Halloween. I want to iterate something that I went through with one of my one-on-one clients. If anyone's interested in doing one-on-one stuff with me, hit me up. We can work something out. Let's have a look at Dogecoin. Lest us not forget, and I'm not even going to do any mad TA. I'm just going to do some basic baby, what do you call it, analysis, right? I just want to remind everyone why it's super important to be positioned well in this market what in spot assets that you believe in. Let's look at Dogecoin, right? On the 11th of January 2021, pardon me, Dogecoin was at 1.26 billion market cap. A few months later, as of the 10th of May 2021, which is only 120 days, Dogecoin peaked at 73.8 billion. Now, could somebody in this webinar tell me what X multiple that is in 120 days? From 1 billion to 73.
73.
73x. It's spot trades like this that I live for, basically. On the 12th of September 2021, Shiba Inu was at 2.6 billion. On the 31st of October, it's 35, so that's like 17x. Not quite as impressive as Doge. We have the ability in this market to catch such gains, right? We have the ability to catch those gains. You just need conviction in this pool of assets, in the top 100, where you want to be allocated at what price. Now, like I said, I have a bearish bias to the market between now and at least the 3rd. To be fair, now I'm looking at this, I am prepared for the storm. Let me go on camera. I'm very passionate about this. Rather than overly predicting the short term, because I know it will be beautiful to catch 100x leverage on every short and high every few days. I dream about this as well. I dream about being a 100x leverage trader who moves between the market every few days and catches the lows and highs. And I know we see people on Twitter doing 1000x, but I will be content. I will be content with a 5 to 10x in terms of portfolio. Hopefully you guys are the same. And to almost ensure that 5 to 10x in this bull market, I want to find convictions in where to load up size. Right now, the definition of size is not the fiat currency amount. A lot of people like to ask me, how much should I put in? The most important thing you have to ask yourself is what percentage of your net worth, what percentage of your risk appetite portfolio do you want to allocate? The reason why I advocate for education and specifically backtesting, right? Because education, you can be in a super long, tail-winded, never-ending rabbit hole of learning, and not making profit. Ryan, are you there?
Yes, I'm here, and yes, that
Okay,
was me,
okay.
and sometimes
You,
still is.
You've been in this game for 5 years, yeah? In 5 years, let me ask you, and I'm sure you'll be with something babyish, yeah. Let's go to Ethereum because sometimes the easy stuff works. Okay, so this is Ethereum and this is the RSI. Do you know how to use the RSI in spot investing and trading?
I do, yeah.
Okay, could you quickly explain how to use the RSI in conjunction with buying and selling Confluence?
So if you wanted to buy something, you basically want to wait till the RSI is at the bottom. So then that means that it's oversold. And when it's oversold, you want to buy and then basically wait for the RSI to rise. So it starts to become oversold when it gets to that bottom 30 line. And then the top one is 70. So, if you see, you might want to wait till it's just crossed over that 30 and then buy, or you might want to wait till it's sort of pointing up. And obviously that also depends on what time frame you're looking at, because obviously you got what is it, top down analysis. So, it might be at the top on the 5 minute or the 10 minute or the half an hour, but if the RSI is oversold on like the
Okay,
monthly, then happy days. Like, get it now, wait a couple of months, and you should be good.
let me just get this straight. Are you telling me that throughout the 5 years you've been reading the RSI on the 5, 10, and 30 minutes?
No, 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 no. I'm just giving that as an example. I'm just saying, like, your trades. It's very easy to get confused between time frames because ultimately you want to, the best thing you could do is wait for the RSI to be oversold on the monthly, let's say, put your money in and then have the patience to wait a couple of months. That's the best thing you could do. But I find myself personally, psychologically, however I'm feeling that day might depend on what I'm doing. The longer I'm sort of in this game, and now I've started like trading. My psychology and my patience has improved like hugely, like, and exponentially, to be honest with you. So I'm much more about long term than short term, because I think it's one of those things. During COVID, it was easy for everyone to make money, and then that all died off, and now you have to take it seriously and know what you're doing. But like you were saying previously, it's very easy to go down a wormhole of loads of information and then get analysis paralysis and all that jazz.
Yeah. So first of all, I would recommend that nobody personally does any RSI analysis on crypto under 4 hours. That is the lowest time frame
Yeah.
anybody should do technical analysis on Ethereum. I would not trust any 15-minute, 30-minute, 1 hour analysis. I can just about trust 4 hours.
Yeah,
And even then,
it's just noise
the-
below 4 hours, isn't it? Really?
exactly. So in your 5 years, have you ever back tested Ethereum on a daily RSI? Because I can do it right now in the past five
Admittedly,
years.
do you
Buy
know what?
signal. What?
You want me to be honest with you?
Buy.
Honest with you, I first
Yeah.
started back testing anything, like properly back testing, today. Like literally this afternoon,
Wow.
I started back testing on gold. Yeah, that's my honest.
So basically, if you was a medium term investor, you don't even need to be a long term investor, right? I, I I think there's a beauty in the medium term. So the medium term is 3 to 9 months. That is my preferred time frame. I don't want to talk about years because I don't have kids in a few years. I didn't know 2 years ago I'd be married. You know what I mean? And I am. So so 2 years is too long, right? But 3 to 9 months is acceptable. Even buying here, right, and selling here. This is a midterm spot trade. That's 67% in 5 months. That's good. Let me make that red. Now, this is not exciting. Would you do this on leverage? No, because what crazy crackhead is leaving a leverage trade open for 5 months? You got to be on. You got to be a different kind of breed to keep a trade open for 5 months, right? So 63% doesn't sound that exciting. But what if, and this is not financial advice, what if you had 20% of your net worth in the dip? Or 20% of your risk appetite net worth in the dip? That would be sensational. Buy, sell. It's because you can do it with size and it doesn't cost you money to open up the spot investment or the spot trade. The world will have you, the world sells you leverage, and only a few people are good at it. Not me. I admit that. Yeah, so what do I see? What do I see? So I don't want to call the Ethereum bottom. I don't want to call the Ethereum bottom. But I accept that maybe the am I 3.7? Mikkel, what's your second thoughts? Do you think Ethereum's coming down to 3.7?
Possibly. I
You
think
think
the whole
we're breaking this trend?
yeah, I think the whole of crypto
Have
might
you done any analysis on ETH?
drop for a while. Yeah.
My bias is that we're going to go down to 3.7.
Yeah.
I think this will be where I think we're going to go. I don't think we're going to go to 3.3. I don't think we're going to go here.
Now these people just popping fireworks in my area.
This is to give away the source. To give away the source of how I look at the market is I have a big watch list. I have a big watch list, and I have great assets at multiple buy prices, in which I believe that there is an extreme likelihood that the asset will be more expensive than this buy price within 3 to 9 months. And I say 3 to 9 months because I don't want to hear that something is going to be up in 2 years. It's too long. At the same time, I don't want the pressure to predict what's going to happen tomorrow or next week. It's too short. This is why I advocate for midterm investing. And to be honest, I'm just going to share with you guys. Okay, my phone is running out of battery, so I'm going to.
No.
Yo, 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 am I back? Can you guys hear me?
Yep.
Hello, hello, hello.
Yeah.
All right, perfect. Okay, so first of all, has anyone got any questions? Because I'm about to just go through a watch list of assets that I think are good at good prices. Basically, what I'm about to do.
I have a question. Do you think since interest rates gonna get dropped here, do you think people would put in
Yeah.
short loans for crypto?
Do I
You
think
think we
people
get
will what?
a flood of money? You see, like how we get new rates dropping,
Into
right?
crypto?
Do you think a lot of people would be pushing money?
Well, of course.
Yeah, or like even crypto related businesses, like
Of course. The most bullish thing is buy the crypto dip. It's sensational right now. Look, history repeats itself. This is so easy. Look at this easy play. Let's imagine where we were 2 years ago. 2 years ago, we were here. We're here. 2 years ago, the fear and greed index was exactly where it was today, pretty much. This 39 to 34 range. Bitcoin was 26K. At the end of the year, oh, god damn, what happened there?
At the end of the year, Bitcoin. Where am I? Sorry, this is confusing because it's American. You're confusing me. Okay, let's go to here. Yeah, so Bitcoin went from 26K to 43K in Q4. Now let's go to last year. Bitcoin in 2024. Where are we? 28, 65K. And at the end of the year, we end at the year at 94K. But we do peak in the middle of November at 100K, pretty much. Right? So, I mean, that's still a lot of movement. That's still a lot of movement. We have reset back to 34. Now, let's think about what catalyst would push the fear and greed index further than it is now. The only reason we touch this fear and greed is because of Trump tariffs. Everyone is cutting interest rates. If I just do a quick grok right now, and this would be a good way to let's do a live grok. Across the world, what is monetary? What has monetary policy, mainly interest rates, look like across the world, world's liquidity pools? The ECB, the PBOC, BOJ, BOE, Bank of England, and of course the Fed. Look like this year, and what is monetary policy statistically likely to be between now and 31st of December? We know that the Fed is cutting. I'm pretty sure at the top of my head that all these other major liquidity providers, so Europe, China, Japan, and England, I mean, I'm pretty sure Trump is just going to bully them to cut anyway. I think I have this theory that he's like a super tyrant of the world, and everyone's going to follow suit. Let's just have a look. Whilst that's doing that, I'm going to go over some Twitter stuff that I've retweeted. So there's only a few important people to follow on Twitter for crypto. Oh, what's happening there? So wait for Grok to think. Those people are Thomas on Markets. I'll give away the app in a second. Pardon me. So Thomas on Markets, and he now works in conjunction with Milk Road Macro. And we've got, what's his art again? Is it Bitter Julian? No, Julian Battelle. Yeah, this guy, Bitter Julian Battelle. He's like the brains behind Royal Paul's Real Vision, in my opinion. No disrespect to Roll, but I think this guy's, well, if he's not way smarter, he at least puts out more important information in terms of what's applicable to the market. And then we've got Darius Dale, this guy here, who is the founder of 42 Macro. 42 Macro. Who else on the top of my head? And then we've got Cross Border Capital, these guys here. And I think I gave away like 5 or 6 Twitters. Just have all of those people on post notifications. And you will have a huge macro edge on what's going on. Right, let's have a look. Big ups to AI. We love this. Year-to-date interest rate changes in 2025. Fantastic. The central bank at the start of 2025 were 4.2 to 4.5%. They finally cut as of September. The ECB at the start of 2025, interest rates were 2.25 to 2.4, down to 2% to 2.15. The BOJ, okay, they've actually increased their interest rates, and I think this carried on to some kind of yen carry trade, which is a bit bearish for the market, but that's fine because Japan are no longer the major player or too much of a major player in the liquidity pool. England has reduced, and so has the People's Bank of China. To be fair, outside the Fed, the most important liquidity provider is now the PBOC, and second to that, the ECB. So the three biggest liquidity providers have eased their monetary policies, and let's see what it predicts between now and the end of the year. Sorry, guys. Drink some orange juice. So, it's expected that the Fed, which have two more meetings on the 28th to the 29th, they're expected to cut 50 basis points, bringing interest rates down to 3.5 to 3.75. And the ECB, the next meeting on the 30th of October, which is, isn't it very funny how the Fed and the ECB pretty much have their cuts on the same day? Okay, this is slightly bearish news for the market, but obviously the market needs to be balanced out. The next meeting on the 30th of October, there's a 50% probability of a 50 basis points hike. Okay. The Bank of England, a high probability of a 25 basis points cut, and the PBOC, there's a likelihood of 10 basis points cut. So yeah, this is overall very bullish, except the Bank of Japan, which is fine because we've got 4 out of 5 of the biggest liquidity providers. In fact, let me just ask this: what percentage of the liquidity pool of the global liquidity pool does BOJ contribute to versus PBOC versus ECB? This is how you use AI, guys, to help you with your investment trading. Okay, I want to go over a few tweets. If you know, you know. What is this? He's talking about US factor. I don't know what that is. You know what you do? You don't know what something is. You ask AI. I'm not a financial advisor. Explain to me this chart in basic English, and most importantly, how it previously correlated to risk on assets and what it's predicting for Q4. Okay. Julian. No, the business cycle is held back because rates are still too high. Wall Street has done well because liquidity has been rising. Yeah, that's correct, across the ECB and the PBOC. And this is exactly why we stay bullish after calling the cycle lows back in Q4 2022. But Main Street is the ISM. So there's Wall Street, which is the financial markets, which is the world's biggest casino. And there's Main Street, which is the real world. And historically speaking, the ISM, which I want you guys to do research on, basically the bull market. Think of this logically, right? The markets can only keep rising to a certain resistance, to a certain ceiling, if the actual economy is not doing great. Now, people don't like to see this, but we're still picking up a lot from COVID when it comes to the flow of real world business. It seems like things are going well, or even better, because there's lots of hyperinflated currency in the world and the markets are doing well. But at some point, this business cycle actually needs to rise. And the prediction is that ISM is going to rise, which is going to be a super catalyst for um, risk on assets. And I've said this time and time again, but I'll repeat myself. As time goes on, I am more and more convinced that we have an increased chance of something called a super cycle. A super cycle being a bull market that lasts for more than 4 years. We have historically have had. One second, I'm going to take off my hoodie. It's super hot. Give me a sec, guys.
We have ISM services Friday the 3rd,
Turn off the heater.
Yeah.
Sorry, say that again, Mikhail.
I say Friday the 3rd. We have.
Hello.
Yeah. You hear me?
Yeah. Friday the 3rd. What's going on Friday the 3rd?
At 10 a.m. we have ISM services. It's news.
So it'll tell us if the ISM is bullish or bearish in terms of industrial and manufacturing and stuff.
Yep.
Okay. Let's have a look. Let's go to Forex Factory. Have you got any thoughts on what the result will be, personally speaking, or not?
To be honest with you, I'm waiting. There's a report on the force as well for construction spend and ISM manufacturing, and then I guess on the 3rd is ISM services. So it's kind of like, but this whole week coming up is Fed speeches, and Thursday you got jobless report or jobless claims. So it's gonna be a pretty interesting week. There's no earnings this week as well. Barely any earnings. But yeah,
okay.
Hopefully the market don't downturn too much.
I thought for your options guy, bro. Up or down, make the P's. Short, long, or you prefer to go long? I prefer to go long.
No, I doing like a straddle strategy, so I just doing ranging. So I want price to range between 2 points. So it's like both long and short.
Okay, fair enough. Yeah, guys. Before the 2008 financial crash, we did actually have people very quick to forget that this was like a 5-year bull market. This actually 5 years. What does anybody know why the markets crashed between 2000 and 2002? Does anyone know what crash this is?
No idea.
Without Mikkel saying it,
money
I know he
print?
knows. This is the .com crash.
Oh yeah.
The .com bubble. Yeah, this is when like even Amazon went down by I think 98%, even though the balance sheet was doing fantastic. Before this crash, the stock market pretty much went up for 5 years. Oh, sorry. 5 years. 5 years. 5 years. Since then, we've pretty much had 4-year cycles. But I do believe that, and right now, don't hold me to this because I want to get new information and different what do you call it? There's going to be different periods. So not different periods. As I get new information, I'm going to come to new consensus, right? But if I had to blind guess when the top of the market is going to be, I'm going to say around May 2026. But if I were to predict, and it's really hard to predict what's going to happen in a year, what I think is likely going to happen is this will be and guys, this is why you should keep coming to the webinars, because what I say today is not what I think in 2 weeks. I can only make this prediction with all the information that I have in this moment in human time, right? In 2 weeks, we're going to know more. We're going to be closer to this date. But I honestly think that this is going to be like the top, and then Jerome Powell, which is the head of the Fed, is finally going to get caught. That's going to be a bullish news, but a sell the news event. Maybe we'll go through a short bear market and then back to another bull market. This has been my theory that I've spoke about for at least 2 months. And as time and time goes on, and I study the market and take consensus from people more important to me, this is the play that I have in my head. Of course, I can change my mind in 2 weeks if some crazy shit happens with tariffs, because I can't predict black swan events. But I honestly think that this was a COVID style crash. This is a COVID style crash, right? And look how the market soars. This is actual consolidation and bear market. So I think we have a lot to springboard, but I don't expect like a 1 year consolidation. This is 1 year. Why? Because we've got AI and shit moves faster. Mind my language. Anyway, this is very, very discretionary, qualitative, finger painting theory that is not overly backed by well-trained model stats and statistics. But I'm just kind of like free flowing my thoughts. Right, it's 11:15 p.m. Let me take any Q&As. Anything you guys want me to look at, or any of my thoughts? I mean, I could go through more assets. I think that's boring. Feel free to screenshot this, guys. These are my Coinbase buy prices. 211 is like the load the boat price. This is like, you could, not saying you should sell your house, but if you did, you could probably buy it back. That's a crazy thing to say at 11:15 a.m. This is why it's not financial advice. Hello. Just go and check on my son. No problem. Do your dad duties, man. Salman, any questions from yourself? Anything you want me to look at? You want me to look at Zora?
You know what? It's just
There we go.
it's just interesting what you're saying. With the sort of pullback at the minute, I'm sort of meant to come in because I'm just sort of scaling in, but I'm just thinking I don't want to scale in too late. So obviously Zora's not been dropping too heavily, but so I'll just keep staying at like the 200 mark, but I don't know if it's going to be dropping below 200. Aerodrome looks like it's staying at one. I think it's at $1. So yeah, you can have a look at that if you want. I know you said you didn't want to go through each asset, but if you've got time, don't mind.
No. No, I got time. Oops. Today's the DMI. Oops, today's the settings. Right, so I'm going to be honest with you. I think Aerodrome's going to drop further. I think it will drop to at least 93. I think we'll retest this wick. I think that's likely scenario. And then next after that is 86. I don't know if we'll go down to 74 cents, but I have a bearish bias. Let's look at the 10-20 moving average. Is this, what did that tell you? And we got this, and we got this, and we got this. There's basically everything is telling me this is going down. You see, 10-20 crossover, sell signal. Let's go down to the daily. You could argue that it's the bottom. you could argue it's the bottom. But because I believe that the market overall is still bearish, and even here on this nice equity clock seasonality thing, it doesn't say that it expects for the Nasdaq, the Russell, and the S&P to be bullish till at least the starting 9th of October, which is in line with my bias that we're going to go down to at least the 3rd, potentially the 7th. So I think Aerodrome has space to fall. But at the same time, if you go to a short time frame, you could say this is the bottom. So if you want to catch it, you can catch it. But I will be prepared for it to go down further. Are you thinking about buying some at this level?
Bro, to be fair, I've like sort of like split it up. So I've already been buying in now. So I've only got a bit left now to buy in. So I'm thinking, should I just put it all in now and then just hold and see? But obviously, if it's going to drop further, I can hold back. AVAX is that other one. It's a bit of a weird one, AVAX, because it sort of jumps up quite high, isn't it? So um, it's like, even with that, it's been at 29.30. Don't know if it's going to drop further because it jumped up quite heavy before, just as the interest rate got cut. So
To be fair, I'm not gonna lie. This looks like a short-term bullish chart. Short term, I wouldn't be surprised if this tested here and then dipped down. This is what crypto likes to do. Likes to do a lot. Like, I think this is basically a bull trap. I know you don't like to catch short trades, but I actually think this is going to go up to 35 and then test back down. That would be the most likely scenario that I see happening.
yeah,
So I don't know if you want to scalp this one, you could. But overall, I'm not bullish. Look, this is the yellow. The purple has just gone below the yellow on the RSI. The blue is about to cross the orange. We've got bullish exhaustion, and this orange looks like it's coming up. So I honestly think that it's gonna see. Look on the 6 hours. See how it's bullish on the 6 hours. I honestly think it's gonna do this, hit the resistance, then tap below, and then basically fill out this order because I basically, 3 years of just trading and investing, I understand that often there's like liquidity that needs to be filled on exchanges. So if you're looking for a quick trade, you could do this if you want. If you want to have some fun. But if you want to be a serious investor, I would still wait for at least $27. I think it's going to go down to 25. It's going to fill in this area. That's what I think in it. I'm looking at the chart. But you can also be a long-term investor and just decide, you know what? It's a good price now, and I'm confident we're going to swing back to these highs. And then if you just go to a longer time frame, do I think AVAX is a good investment? Yeah, I do. I do think it's a good investment. Do I think this is gonna pace up to here and here at some point? Yeah. So it just depends on what your time frame is. But even here on the 8 days, it's not even bullish on the 8 days. Well, are we bullish? Bit 50-50, bit 50-50. But 3 days bearish, 8 days bit 50-50. I think this RSI needs to come reset down to this level. That's what I think of AVAX.
nice one.
No worries, no worries. Mikel, my friend.
Yes, sir. I have some
Anything you want to ask
questions.
me? I don't think.
Yeah, but
Yeah,
this
go
is
on.
not about any crypto specifically. This is just about overall markets. So you see, like how like strategy holding
Yeah.
Bitcoin. There's a Ethereum company that's gonna hold like Ethereum. And they have like BlackRock who's trading some, holding some. What do you think like the implications could be if big asset managers started to not dictate but manipulate or try to manipulate prices? You think that like with high frequency trading
Wait,
or maybe with like internal pumps and dumps or price manipulation through other factors? You think that'd be like a possibility going forward? And if so,
wait. Do
like
I think? So sorry. Do I think there's a possibility moving forward that what?
you see like these big asset managers. So we have like strategy, which is like Michael Saylor
Yeah,
stuff, who's like holding, just buying holding. So he's long, he's not like trading anything. But
yeah,
we have like BlackRock and other wealth management
yeah,
who's
yeah, yeah,
actively trading, you know what I'm saying? So you think with their
yeah.
strategies of high frequency trading or maybe even like shorting, longing, if they could manipulate price, and if that's your theory that they could, you think there's any strategies that we could develop that would help, you know, help us be at the edge?
I th- I think they already do. I honestly believe that all of this, all of this is institutionalized. I don't believe that any of the top cryptos. I don't believe this price action comes from retail. Maybe lower down it comes from retail, especially meme coins on Dex Screener. Yeah, that's retail. But I believe for a long time the Ethereum and Solana and BNB XRP price is is already moved by the institution. I could be wrong, but I
So,
believe that already. So with regards to yeah, go on.
so would the long term strategy just be buying cheapest prices, holding forever type activity?
No, because I think buying and holding forever is very inefficient and very unrealistic for most people. I think I think the most efficient way to trade crypto, I'm going to be very biased, but it's my way, which is buying the assets low on spot, selling them high on spot, leverage, maybe having a separate account to maybe having a leverage account with maximum 10%. So when I buy on spot, I would long in leverage. I don't actually do this, but I know people that do this. So they would basically print cash on the way up, and then I would sell my spot in cash, hold most of that cash, but use a bit of the leverage account to basically short down, and then eventually this leverage account, I guess in that sense would increase. So maybe it'd go from like what 10% to 2%, and then you'd move the excess into the spot to then buy the dip if you wanted to mix leverage and spot. But most people don't have enough discipline, including myself. I don't have enough discipline to do that. So I would just to be all be in spot on the dips and try to sell well in cash. I'm going to give you a very good example, right? And everybody can backtest this, right? A really good example is Solana. If you backtest Solana on the RSI, on the daily RSI alone, even without the MACD and the DMI, you'll find that it's pretty damn accurate. If you combine the DMI and the MACD on the daily of Solana in the past 3 years, you'll be right 85 to 92% of the time on the buy and sell. And I'll give you an example, right? So let's start here on the 7th of September, right? Let's say we bought, so Solana was like 111. Let's say we bought 10 Solana here, yeah? And then we sold, let's say we just rode it to like anywhere here, right? So we fiat currency wise, we're up like 74%. And let's say we sold here and we bought back in here, right? It gave us the buy. Now, what we've done between here and here, we've gone from 10 Solana to 13 Solana. And then up here we sell, and we go down here, buy, not the perfect buy, but whatever, just hold that position, buy, sell here, sell here. So we've gone from 10 Solana here, 13, sell here, okay, sell here, down here. That's like 50% gain. So we've gone from 13 Solana to I don't know, let's just call it 18, right? And then we sold here. We sold here. Maybe bought back in here, and maybe like sold here from here to here. What's that like? 30%. They were from 18 Solana. So let's say we've gone up again from like 18 Solana to I don't know, 30%. 30%, maybe like 23 Solana or whatever. Right, let's go with 23 Solana, right? And let's say you just held your 23 Solana. We're gonna calculate it up. This is easier said than done, but I'm just kind of making you guys understand why I love spot trading in the long term. Let's say you get to 23 Solana on buying and selling, and you sell Solana at 230. That's 500% in 1 year. The journey from here to maybe here is 500%. But if you just bought and hold, you'd only be up 152%. That is the
Yeah, that's not
difference
bad.
between buying and selling and just buying and holding. Yeah. It's not
It'd be nice to quantify
it's
how
not the
much
thousand
days.
percent that
I say it would be nice to quantify how much days for like
sorry,
an
say that
average
again.
buy and sell. I say it would be nice to quantify how
Yeah.
much days for an average buy and sell. Like, I'm in a position for, say,
Yeah.
between 7 to 14 days or something. That'd be nice. I guess you could do maths on that later.
Yeah. Yeah. Unfortunately, it's not quite as simple as 7 to 13 days because sometimes there's grueling periods where you're actually holding you're
I know.
you're holding for longer than expected.
That was just like an example, obviously. But yeah, I know what you're saying.
Yeah. Yeah, this required extreme patience. And I didn't catch this because this is a Trump tariff. It's eating drawdown. I think I may have got out maybe here, but definitely not the top. Definitely not the top. Okay. Any other questions? Maybe one from Ryan. And I think we're good.
I think I'm good for now, man. I'm just listening in, to be honest with you, bro. Be interesting to know what coins you got your eyes on, if anything.
Yeah, sure. Let me tell you what coins I got my eyes on. So, number one play of the cycle, as of time of recording, because obviously opinions change, is if you want the safe play, Dogecoin. This is the world's easiest 100%. I know 100% doesn't sound sensational in a world where you want to make 700%, etc. But if you told me you need to put all your money in one asset between now and the end of the year, it's got to be Dogecoin. I would challenge anybody to tell me an easier 2x than Dogecoin with the best risk and reward ratio. Why would Dogecoin not go to 46 cents? I can't find a reason for it not to go there. There is no reason. My public prediction, Dogecoin will 2x between now and the end of the year. And the good thing about this is you can put in size, right? You can put in size. You don't put in 1% of your portfolio, you don't put in 2%. Like this is something that you can put, not financial advice, 10, 20, 30% in the portfolio. I actually know somebody who has 6 figures in crypto and they have 80% of their portfolio in Dogecoin. Now, do I recommend that? No, not necessarily. But might be the easiest 100 grand when my boys prints. Who knows?
Do you know what? Can I just say something
That's
else? I just
crazy.
noticed you've got Brett and Aero in there. What do you think about those two? Because I bought Brett, but again, since I bought Brett, It went up and then just came crashing down for the longest time. I haven't sold it, but I'm like, I know the second I sell it, it will fly back up again. And Aero's made some good gains for me recently, but extremely volatile. And obviously, it's been coming down ever since I got in it. You know
Okay.
what I mean? Like I made the money, and then now it's gone into negative P&L.
Okay, so first of all, what is your understanding of Brett fundamentally outside the charts?
So my understanding of Brett is that Brett is like it's tied very closely to Coinbase and the base ecosystem or whatever. It's like the number one base coin effectively. That's probably as much as I could confidently say about it. And when base chain
So
becomes
unfortunately,
popular, then
yeah, go
it
on.
should fly.
Right, so unfortunately, the information that you're saying is outdated. This was the narrative, but is no
Right.
longer the narrative.
Okay. Makes
Um,
that will make sense then.
Brett, yeah, yeah. So the reason why Brett has gone down is because that narrative was not held. I'm not saying the narrative can't research, right? But the narrative is not held. So there's a website called DeFi Llama, which shows you how much money is locked on each chain. So if we go to the base chain, we can see that since when is this high? May 2025, May 2025, May since May 2025, the TVL has increased by 50%. So it's gone from 3 billion locked on the chain to 5 billion. This is fundamentally bullish for the base chain. However, Brett has not followed suit. Toshi, since May, has been on an uptrend. Now, this is why I encourage people to be practitioners in crypto, not just analysts. Do you have a base wallet, a Coinbase wallet, not the exchange, the wallet?
Yeah, I've got the wallet. Yeah, I think I've got like a teeny bit of Toshi, to be honest. But I think it came from, sometimes in your Coinbase wallet, other coins just show up. Don't know if you get that.
Yeah,
So I think I've randomly got
yeah,
some
yeah, I get it.
Toshi, but I've not really looked into Toshi.
Okay, okay, so I encourage everyone to go there. If anyone, I encourage everyone to do this. If you actually spend a little bit of time on the base app, as in you go to the like the what do you call it, the website section, you'll see that Coinbase themselves push Toshi. If you did some analysis on the base app, you'll see that Toshi is the third biggest app on the base wallet. Brett has not got the Coinbase cosign where Toshi has. So whereas Brett was the biggest meme coin on the base chain, the narrative has flipped into Toshi. And if you're just looking at it from a technical point of view, does this look like a bullish chart or not? I'm not saying it can't turn around. It can, but it takes energy to turn around a bearish chart. You need to set higher highs and higher low. So you need to set higher highs and low, and you need to set higher highs and higher lows, right? It's basic technical analysis.
Yeah, for sure.
It takes more energy for this chart to turn around. Does this look like a chart that is primed to go up versus Brett? I'm not saying it's the best chart in the world,
I mean,
but
yeah, it's
which looks
definitely
better?
looks like it definitely looks like it's going up. I mean, interestingly, both of them kind of, without pulling up any fibs, but both of them look like they've hit an all-time high and come back to a buying level. But then Toshi's obviously taken off from that buying level, and Brett hasn't.
Yes, you're right. Brett hasn't. So because I'm very tuned in with the market, I know Like I became bearish on Toshi as of maybe this this time period because I'm in tune with crypto culture, and I just noticing that Coinbase is posting Toshi. This obviously
Right.
just comes with being in tune. There's not a what do you call it? There's not a strategy to be in tune, right? You just whether you pay attention or not. But I can
Yeah.
tell you as a practitioner that Coinbase themselves have been co-signing Toshi where they've not been co-signing Brett. And then obviously people talk about this and then consensus is spread along. But if, from a basic chart point of view, as you can see, basic technicals, Toshi is more bullish than Brett without knowing anything about the asset.
Yeah. And so would you say that
In terms of aero,
yeah, sorry, go ahead. You're about to say it. Sorry, I think there's a bit of a lag, so it makes me cut you off. Sorry, bro.
now go on to ask me about aero. Ask me about aero.
No, I was gonna say, does it seem then like Aerodrome seems like the previous Brett play? Because now I hear that Aerodrome again is something to do with the base chain system narrative.
Okay, respectfully, you've not done enough research to come to that consensus.
Sure.
Aerodrome, I know immediately I know immediately when people describe assets if they've done the work or not. Aerodrome is fundamentally an extremely bullish asset in a category of stratosphere that cannot be compared to Brett and Toshi. Aerodrome is the biggest liquidity provider on the base chain. It is equivalent to PancakeSwap on BNB, Jupiter on Solana, and Uniswap for Ethereum.
Okay,
So
that's good.
if you are bullish on the base ecosystem, you can be bullish on Aerodrome even if the chart is bearish.
Okay,
So I'm not saying buy Aerodrome now, but I mean that if it gets to this point, you can load the boat.
okay.
Does that make sense?
Yeah, yeah, yeah,
Whereas just because Brett gets to a cheap price, it doesn't mean you should load the boat.
yeah,
Just because Brett gets to this price, sorry, if Brett falls further to here, don't live in sunk cost fallacy and tell yourself this is the bottom. It's going to shoot up now because there's what's called catching a falling knife, and a falling knife does this. And yeah, it
yeah,
goes up a bit, but in the time that it goes to this high, Aerodrome does this. Does that make sense?
yeah,
Because this is fundamentally and institutionally, if you do research, a product that is almost infallible. I say
okay.
almost because everything's fallible, right?
Yeah, yeah.
I don't need to put everything in. I don't need to put
Oh,
everything at 72 cents and then come like ninja.
no,
I'll
no,
put
no, no,
everything at 72 cents and you said it was going to go back to the old time high.
no.
But this is my this everything I speak about is probabilities, right? And I am wrong sometimes. Um, but I like to give strong reasonings on why I think something will or will not happen. Yeah, technically speaking, this chart is bearish, right? The DMI is about to cross over, right? That orange is looking like it's going to cross the purple. These look like they're going to cross. This looks like it's going to get bigger. The yellow is above the purple. There's not. This is a lower high, so there's nothing saying this chart's going to go up yet.
Yeah.
But if you
What
study
what is the
Buffett,
DMI out
you'll
of
see
interest? Because
that
I've
he
not seen that.
loves buying the dip. The DMI is the directional moving average.
Okay.
It comes like this. It comes like this, right? And I remove the red line in the middle. I don't even know what it does, but I know what the blue and the orange does. When the orange crosses the blue, it is a signal of bullish momentum. When the blue crosses the orange, it is a sign of bearish momentum. So it's just a momentum indicator in confluence with the MACD and the RSI.
Okay.
Yes, sir. All right, damn, I really went overboard with this one, but I hope you guys had a good session. I went extra hard for you, Ryan. You know what I mean? First Sunday session, so I thought I'd give you a bit extra.
Thank you, bro.
No
Appreciate
worries, bro. No worries, bro. No worries. Message me your availability. We'll get that one on